Good morning, good morning, good morning, good morning, good morning. My name is Sean Dexter and welcome you back to the Mango Grow for your daily Bitcoin analysis video. Alrighty, brand new week, brand new developments. Last week, so much happened that it feels like a month ago. But the major theme for us over here at Mango was, hey, ignore all the noise, watch the 4-day, watch the bi-weekly and get excited for the monthly. Now, we actually have some strong developments, especially on the bi-weekly, and mainly I want to talk about what's going on the dashboard. So without further ado, let's go ahead and jump right into it. We're going to start with the dashboard right over here. You guys can find the dashboard at app.mangoresearch.co. There's no reason to not follow along. There's a free as well as a premium version, but the free version is good enough for most people who are just casually following the markets. We're going to go ahead and start with Bitcoin right over here by hitting the drop down. And my, oh my, ain't that a pretty picture? We got the colors that we love to see, a lot of green and some blue. Because remember guys, what does blue stand for? Blue stands for volatility compressing, and compression leads to expansion. But the big question is expansion in what direction? Because remember guys, volatility never tells you anything about direction, okay? Volatility compression leads to expansion, yes. But what about direction? Well, over here at Mango, what we like to do is err to the side of the trend. So when I see green on the trends, long, and volatility being blue, I am erring to the direction of expansion being towards the bullish side. So this picture here is looking fantastic. The 4 hours long, the 12 hours long, the daily is long, the 2-day is long as well. More importantly, guys, the two big ones over here, the weekly being red and the 4-day being red, have both flipped from short to neutral. Massive developments on the dashboard over here. The trend is beginning to line up with everything that we want. The entire trend profile, the volatility profile, it's all looking good. But you have to also be a tad bit careful over here, because if you look onto the right hand side of your screen, of the dashboard over here, you're going to see that on the 12-hour time frame, we have potential bearish divergence and prices sitting in the expensive zone of the range, right? So bearish divergence plus expensive zone, we could get a pullback leading to a high or low buy opportunity. So right at this juncture, you want to stay your hand. That's what the dashboard alone is telling us. And in fact, if you go ahead and look at the daily as well as the 2-day, they are both sitting in the expensive zone as well. So price, while it's looking good, it may not be the most opportunistic area to buy. Let's go ahead and confluence that with the charts. We're going to go ahead and start with the 4-day time frame. And guys, what have we been saying for the entirety of last week? We said wait for the 4-day time frame to clear the $64,000 to $65,000 region. We are sitting right up against that region, guys. The bulls and the bears are fighting it out over here. Let them fight it out. Let them duke it out. We don't want to get into this mess. We are mercenaries. We pick the winning side and we join the winning side. No biases, no loyalty. The only loyalty we have is to our loved ones, to put food on their plate and a roof on top of their head. So let the bulls and bears battle out over here at this region. If 64 to 65K gets cleared out with conviction, we can look for this W-like formation that we've been talking about to trigger, and that will start a cascading move all the way up, likely to $100,000. But let's say the bulls fail here. Let's say the bulls fail here and we see a pullback. Well, in that case, we get to long right over here, somewhere on the top of the cloud, because this TK kiss is likely going to get activated, but the bulls are going to be asked to defend that region, the top of the clouds. Let's say 59,300-ish, right? We get that high low and we look for this move again to around $100,000. So the trade gets even juicier. So regardless of how you look at it, there's a trade coming our way. And when I say a trade coming our way, I'm referring to our leverage trades, because you should have still been in your spot trades. Based on the bi-weekly, we never got permission to exit our spot trades. Based on the monthly, we never got permission to exit our spot trades. So there was no mango reason to exit your spot trades. Over here, in regards to the 4-day time frame, in regards to the dashboard, we are talking about what it will take, what we're looking for for our leverage trades. The 12 hours looking really, really good now. In fact, the 12 hour gave us permission just based on trading the dashboard alone. The 12 hour has been a great barometer. You could have put on your first trade 12 days ago. I did not do it, but now I am back. I am back, baby, and I'm waiting for that confirmation, right? So there's two trades that we could look for. One, the break of this W-like structure that takes us to $100,000, or a potential higher low, and then we move to $100,000, right? So either way, I'm looking for that trade. I'm not in it just yet. I will keep you guys updated as soon as I see the right triggers. So make sure to hit the subscribe and the like button. That way you're not missing out on that big trade when it does come. Now, in regards to our spot positions, the bi-weekly over here has been our guiding light for this entire cycle. It's been the indicator we've been using for our cyclical positional trades. And as you guys can see, we bounced off the bi-weekly in the last candle and closed well above the bi-weekly dynamic. Now, on first glance, you would think that, okay, we bounced, there's not much else that we can discuss over here because, well, we defended the bi-weekly dynamic, right? But on closer inspection, you're going to see something really, really interesting here and really, really exciting. If you guys remember from last week's discussion, what we did was compare this consolidation over here to our current consolidation, right? But we did it in a very objective manner. We said, hey, let's start with the impulsive move that took us into the consolidation and measure from the impulsive move to where the consolidation ended before we started the run, right? Now we're going to go ahead and do the same thing over here. The impulsive move, right, that started the consolidation starts over here, and we'll measure it all the way to where the consolidation is likely to end, which is what we postulated being last week. So we had 196 days in the last consolidation, and we said, hey guys, how crazy would it be if it actually played out the same way again, right? Considering we are seeing signs of that with the big rate cut cycle starting with the Fed, etc., etc. Because remember, we don't care about the actual Fed event. We care about the fact that the cutting cycle has begun, right? We care about the direction that the Fed wants to take the market in. And clearly, Jay Powell wants to start the easing cycle. He literally said in the Jackson Hole meeting that the time has arrived. Okay, so 196 days in the previous consolidation, 196 days thus far. But even then, measuring when the consolidation ends is a bit arbitrary, right? Over here, we can look at it in hindsight and say, okay, clearly it ended over here because we started the big impulsive run. But over here, how do we know we're ending the consolidation? How do we know that we're not doing this, right? We don't know that. Well, we actually do have a development on this chart. Remember, I asked you guys to use a very, very simple template, the Mango dynamic and the 10 SMA. We're using this on the monthly as well, right? If you go ahead and zoom in over here, guys, you're going to see that the bi-weekly has now closed above the bi-weekly 10 SMA as well. Bounced off the bi-weekly dynamic and closed above the bi-weekly 10 SMA. We're now using it as support. If this holds true, it's going to be very similar to what we did on this candle over here. So now we have both. We have an objective way to measure when the consolidation began, which is the impulsive move, and when the consolidation ends, which is the candle upon which the 10 SMA was reclaimed, right? So can we look for the same thing over here? The consolidation begins into the impulsive move and ends when the bi-weekly claims the 10 SMA. Now, right over here, this candle has opened above the bi-weekly 10 SMA, but I want to see a nice green close above the bi-weekly 10 SMA, guys. A nice strong candle, not this weak candle that we have over here, right? I want to see something like this. This was convincing. This to me is not convincing. And guys, if we get that convincing close, now we only close this in 12 days and 17 hours. A lot can happen in that period. But if we get that convincing close above this 10 SMA, it's also gonna line up with the 4-day finally closing above that $64,000 to $65,000 region. And what does that do, guys? That takes us to $100,000. Honestly, guys, I would not be surprised if the next 4-day candle ends up looking like this one right over here. This defining candle that set the tone for this huge run from around $30,000 to $75,000. If we get that kind of candle over here, guys, get ready for fireworks. And finally, let's wrap up with the monthly time frame. This is the time frame to be watching over the next week. We are closing the month in 7 days, 6 days and 16 hours to be precise. Right over here, we have the levels that we are looking for the monthly to close over. A satisfactory close would be 59,600. That is essentially where the monthly 10 SMA is coming in at. A good close is going to be anything above 60,500. Where am I getting that from? Well, we're going to go ahead, place our horizontal right over here, and you're going to see that's coming in at around 60,500, right? So essentially, we want the monthly to not only close over the monthly 10 SMA, but also clear these candle close levels of the consolidation area. And finally, a great close is going to be anything above $65,000, because that is not only going to give us a close above this region over here, but it's going to line up with us getting those all important 4-day candle closes above $65,000. This W-like formation or ascending triangle formation, whatever plays out over here, whatever plays out, okay? Because guys, could be a W that triggers, or could end up being a ascending triangle that plays out in case we get rejected at this structure over here, right? One of the two is gonna lead to fireworks. So the two important charts to be watching for the next few days is the 4-day time frame right over here, as well as the monthly time frame right over here. In 7 days, we'll be having this monthly candle close. A satisfactory close, 59,600. A good close, 60,500. A great close, 65,000. And hey, let's go ahead and get excited a tad bit more. A spectacular close is going to be anything above 71,600. If we get that, my oh my oh my, 6 days and 16 hours to go. Bitcoin can do it. Bitcoin has done crazier things in the past. Why not? But hey, stay your hand for now. We are up against resistance at $64,000. Keep it easy, keep it stress-free, keep it mango. Join our Discord if you have any questions. We are there to answer you. You can find us at themango.com/Discord. And I'm going to keep you guys updated as soon as we get that trigger for our leverage trade. So make sure you guys hit the subscribe button so that way you don't miss the trade when it does trigger. All it takes is one trade, guys. Just one trade to make your entire year, hell, to make your entire trading career. That's what crypto promises. I'll see you guys in the next video. Keep it mango, keep it easy, keep it stress-free. Ciao.